All right, let's talk about a real giant in the healthcare world, McKesson. Today, we're going to peel back the curtain on their latest financial report and see what's really driving this company.
We're diving into their official SEC filing, the 10Q report for Q2 2026. Now, if you've ever tried to read one of these, you know they're dense. So our job here is to cut through the jargon and find the actual story hidden in all those numbers.
And wow, what a story it is. Let's just start with this one number, $103 billion. And get this, that's not for a year. That's their revenue for a single 3-month period. Just let that sink in for a second. Okay, so how on earth does a company pull in a number like that? Let's dig into the quarter by the numbers, because it tells a really powerful story about some serious growth. So, check out this comparison. Revenues, up by nearly $10 billion compared to last year. Gross profit, also up. But the real jaw-dropper is that last line, net income. The actual profit after everything is paid. It leaped from just under $300 million to more than $1.1 billion. That's huge.
And just to really put that into perspective, this chart shows you exactly how insane that jump is. I mean, we are talking about nearly a 4 times increase in pure profit in 1 year. A jump like that, it doesn't just happen by accident. So, that's the big question, right? What is going on here? Where's all this explosive growth actually coming from? Well, the answer is pretty clear. McKesson is betting big, and I mean big, on oncology. Cancer care. It's one of the most complex, fastest-growing areas in all of medicine, and they're using a specific playbook to grab a bigger slice of that pie: strategic acquisitions.
And believe me, they are putting their money where their mouth is. We're talking over $3.3 billion spent in just a few months, all of it aimed at beefing up their services in cancer care and other specialty fields.
This spending spree really boils down to 2 major acquisitions. First up, they grabbed a controlling stake in PRISM Vision, which is a big network of eye care practices. Then, they snagged a majority of Core Ventures. Now, Core Ventures is super interesting. They provide all the behind-the-scenes business stuff, like data analytics and management for oncology clinics. Let's look at the price tags. PRISM Vision, $871 million. Core Ventures, a massive $2.5 billion. Now, both of these are getting rolled into McKesson's Oncology and Multispecialty division. And you'll notice this term here, goodwill. Don't let it throw you. It's basically accounting speak for the value that isn't a physical thing, like a brand name, reputation, customer lists. What this really tells you is that McKesson paid a huge premium to buy companies that were already leaders in their fields.
And right in their own report, they tie all this back to their mission of advancing health outcomes. It's a pretty clear signal that they see this specialty care area as their main engine for the future. But here's the twist. While they're spending billions to build that future, they're also dealing with a really big problem from their past.
Yeah, because for all this aggressive expansion, there's this huge multi-billion-dollar shadow hanging over the company, and that is the legal and financial fallout from the opioid crisis.
So, you gotta ask, right? What does that actually mean in dollars and cents? What's the real financial hit from the opioid crisis for McKesson today? The number is just staggering. As of right now, McKesson is on the hook for over $5.7 times billion in opioid-related claims. And that's why that incredible profit jump we saw earlier is so important. They absolutely need that massive growth to help pay for this equally massive cost. So where does a number that big come from? Well, the main chunk is from a huge settlement with 48 states. They're on a payment plan for that, paying out billions all the way through 2038. In fact, they've already shelled out about $2.5 billion. On top of that, there are separate settlements with Native American tribes. And, this is key, it's not totally over. They're still in court appealing other judgments. So this is very much an ongoing story. Okay, so we've seen explosive growth on one side and these huge liabilities on the other. So what's the big picture here? Let's boil it all down to 3 key takeaways.
All right, takeaway number 1. Growth is off the charts. Revenue is way up and profits have just gone through the roof. Number 2, this is all being fueled by a really aggressive strategy. They're pouring billions into acquisitions to own the specialty care and oncology markets. And number 3, you can't ignore the elephant in the room. This massive, ongoing liability from the opioid settlements is still a major factor in the company's future.
So when you step back, what you've got is a company with its foot on the gas, moving forward with incredible speed, but it's also dragging this massive anchor from its past. It's a really high-stakes balancing act, and it could really shape the future of healthcare. So the big question we're left with is, which will win out? Will this huge bet on growth pay off fast enough to outrun the massive bills coming due from its past?